Good afternoon. You're watching Midcap Radar. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Patakia. With me is Mangalam Malu. And, well, every recovery on the Nifty is getting sold into right now, Mangalam. And we are on course for a sixth straight weekly loss.
Sixth straight weekly loss. The only solace that we keep giving ourselves every week is that today's low is not as bad as yesterday's low. That's what's taking place on the Nifty right now as well. But it'll be very interesting to see, how SBI reacts to, what was slightly subdued, but now you do have the slippage data coming in at the bottom of your screen as well. Slippage ratio at 0.75%, slightly higher quarter on quarter, but has seen some moderation year on year as well. We'll get to more details on SBI and, the numbers that come by as the presentation gets uploaded and some granular details do get displayed. The stock hovering with a cut of almost 0.7%. Let's talk about all the top stories that we're tracking this afternoon. A day after hope of an early resolution on trade lifted stocks, uncertainty crept in again, dragging equities lower. Metals and Realty slip while IT and oil and gas did manage to eke out some gains. It's the mid-caps which are dragging.
AU Small Finance Banks gets RBI's approval to transition to a universal bank in the first such approval in the last decade. The license offers greater flexibility in business and eases capital requirements, giving profitability a fillip.
Cummins India surges after reporting their first quarter numbers. Exports see strong growth for the third straight quarter, which, while margins at the highest since the fourth quarter, management commentary in the conference call even better.
LIC has reported strong numbers, beating estimates on the value of new business and the new business margins. The stock is up over 4%.
Biocon under pressure after its revenue comes in lower than estimates in the first quarter. Margins and profits miss estimate. Management tells CNBC-TV18 they're hopeful the exemption on Pharma will continue. Data patterns, on the other hand, slips as revenue, margin and profits, all of them declined in the first quarter. Ramco Cements too is among the top mid-cap losers due to a sharp volume decline. Speaking about the markets right now, 24,450 is where the Nifty is at, about 50 points away from today's low, though we have SBI, which is currently lower, and that's taking the Nifty bank lower by about 0.02%. On the way up, though, we have BPCL, NTPC, some of these old economy stocks doing a lot better. And on the other hand, we do have, IEX and Cummins as well from the broader markets doing a lot better as well. We do have Crompton, which is now spiking right now from the lows. So watch out for that stock. Still sitting with gains of almost under 1%, but it has seen a recovery from the red, the red pack. The stock that is surging right now and with good volumes and on the back of good numbers is KRBL. A 15% up move is what we're seeing on that counter. So watch out for that one. And on the way down, we have Godfrey Phillips, which has been extremely volatile, did well in the morning, recovered from the lows, but that recovery, just like the market, has been sold into, and currently it's back around flat terrain. But all the movers and shakers, we do have Hormas, who's moved to the big wall to tell us about those stocks. Hormas.
Well, interesting list. We start off with the losers then in the broader markets today, considering the tilt of the market. Ramco Cements is one such loser. It's sprung up to the lows of the session now, 6.5% lower on that stock. Chambal Fertilizers is the other one as well. And Jindal Stainless, after yesterday's move, is down another 5% in today's trading session. You spoke about KRBL as a positive earnings reaction. That definitely features as one of those. But look at Kalpataru Projects, look at Cummins India after some strong management commentary as well in the earnings call. And LIC, well, is given up some of those gains, still holding on to a 3.5% advance. Well, on the flip side, though, not so pleasant earnings reactions coming in from Subros. Slight recovery from the lows of the day, still down around 6%. Data Patterns is a defense stock that has recovered from the lows. At one point was down almost 9%. And Birlasoft too, trading with losses of around 3.5% today. On the volumes front, the stocks that are bucking the trend, some of the healthcare names, Global Health is one of them, 6% higher here. Sai Life Sciences had a choppy trading day, but still around 5% higher today. And GIC-RE has also moved back to the day's high, 4.5% higher on very strong volumes. And lastly, some newsmakers today. Coforge, after one of its key clients cut its guidance, is now down 5.5%, down to the lows of the day. And Kalyan Jewellers, what a sharp fall that stock has seen since the morning, now 9% lower here. And Talbros too has now turned negative on a year-to-date basis, 5.5% lower on this stock as well.
All right, Hormaz, thanks a lot for that. With that, let's go across to a note that we have for our viewers. You can unlock a world of exclusivity, expertise, and influence, all of them by just becoming a member of CNBC TV18 Access, which is our premium members-only experience on CNBC-TV18.com. This membership includes access to CNBC TV18's flagship events, interactions with our journalists, all of us, and curated studio tours as well, which gives you e-learning sessions and masterclasses along with some lifestyle benefits too. Welcome back. Look at some of the Adani Group stocks. They are, specifically lower in today's trading session, and the entire group actually. If you look at the Adani End stock, down about 3.5%. Adani Ports is lower by about 2% as well. In the broader markets, we have Adani Total Gas, which too is currently at the lower end of today's trading range. So we'll watch out for this group. Typically, stocks of this group move in tandem. So we'll watch out as, the day progresses from here on. But the stock on our radar right now is Greenlam. The revenue growth for the company was good, 11% odd. But the EBITDA was impacted by one, the forex loss, and the second part is that the new plant which came on stream, which meant that capacity ramp up is yet to happen, while expenses have been taken on board already. On the bottom line, they reported a loss, again, because of higher depreciation and higher finance costs. We have Mr. Mittal, who is joining in to detail the numbers, but more importantly, give us an outlook for the remainder of this year itself. Thanks a lot for joining in. Always a pleasure speaking with you. First quarter, 11.5% revenue growth. No different from what you did in all of FY25. But I remember you had said that you wanted to, see the revenue growth come by around that 18 to 20% mark. 25% of this year is over. Do you think you will get to that 18 to 20% mark by the end of this year?
Well, thank you first for having me on your show. On the growth, if you see the Q1, the domestic business actually has grown at about 22%. It's the international business who struggled a bit in Q1, and I'm fairly confident this will catch up, in the coming 9 months of this fiscal. So we still maintain we should be aiming at we are aiming at a 18 to 20% kind of a top line growth, considering the new plants, new capacities, and the markets we have. So yes, I think to answer your question, that's what we're looking for. Yeah.
So, Mr. Mittal, what are the capacity expansion plans that you have on the anvil? And for your chipboard plant, do you envisage any margin improvement going forward?
So on the capacity expansion for this financial year, we have no further capacities to be added. In fact, over the last 3 years, we have invested nearly 1,500 crores and built 4 plants in 3 locations. So at this moment, we are sitting pretty on capacities across all the product offerings. So FY26, we have no plans of adding more capacities. Our entire focus is on execution and ensuring the capacities we built over the last 3 years, they convert to revenues and profitability improves and cash flow improves. So that's the focus. On the chipboard, our sense is because last quarter, Q1 was the first full quarter we had of chipboard production. The plant's doing very well. The product quality, the quality norms, the acceptance in the market, I think is best in class already in the market. And as we move ahead, we think revenues will keep growing up and operating losses at the EBITDA level will keep reducing. Although on a full year basis, we still expect we'll not be able to be EBITDA break-even in FY26. But we think as we move ahead, we'll keep improving that part of the business also.
Could you give us a sense on what kind of margins are you targeting? Because I remember the last time you joined in, you did say that laminates and plywood margins will improve or the losses in plywood business will reduce.
Right.
Veneer, which is very close to breaking even, will continue to improve. And you have, panels, which the chipboard business, which is currently loss-making, you think it'll take some time before that breaks even as well. So by the end of this year, taking care of the fact that we don't have control over forex, what is the kind of margin that you're targeting? First quarter, you did about 6.5%, including the forex loss.
So on the forex, I want to say that we've had about nearly 18.5 crores of notional forex loss, which if you see the PBT, at the PBT level, and it depends on how the euro moves versus the rupee. On our operational business, which is procurement and sales, we actually export more to Europe than we import. So this is only on the new chipboard plant the loan which has been, the debt which has been funded by a German bank where there's a notional forex loss. On the margin, if you look at Q1, if you exclude forex, we are nearly at a 54, 55 crores of EBITDA. And then if you go segment-wise, laminates is shy of 14 odd percent. And there are losses in the chipboard and the ply business. The plywood business losses have reduced and revenues have grown at about nearly 30 odd percent in Q1. So I think as we move ahead, I expect laminates margins to improve, ply losses to reduce, and losses at the chipboards to also reduce. On a full year basis, it depends on where we close revenues, but considering the growth targets we have, my senses will be more like this year will be more like 11, 12% kind of a blended EBITDA margin across businesses. Raw material costs at the moment look stable. So if that does continue, it depends on how revenues go. And, so I think that'll determine where the margins are and how we close this financial year.
What about debt, Mr. Mittal? Your debt figure has gone up slightly from last year and from the previous quarter as well. Where do you see that peaking out? And do you see that peaking out this year? And are there plans to take on more debt? When particularly because you mentioned you don't have any capacity addition plans this year.
No, so we have no plans to take on more debt. This is already at the peak. And because of the forex loss, some of the debt increases actually because of the accounting. So about 18, 20 crores of debt has gone up because of the euro currency movement versus the rupee. So we don't need to take on more debt. And I think as we move ahead, the cash flow should help us, reduce some debt. And there's no plans to take more debt. So this debt level is nearly at the peak. So that's where we are in the debt position.
And what about the thing that I wanted to understand from you on working capital? It's been disciplined despite the sort of uncertainties that we're seeing. 59 days. Do you maintain this 55 to 60 day range, or do you see any improvement from here on? And the second part is on exports. There is a fair amount of uncertainty. You had said that you're shifting focus to domestic versus exports and the mix should be 60-40. Where does that stand at? And what's your prognosis for any sort of improvement in exports?
So your first question was on the
working capital.
Okay, yes, on the working capital, you have to appreciate that over the last 3 years, we've had new businesses, new plants, so despite that, working capital has been reasonably well managed, I think more or less best in class in our industry. And I think going ahead with, with our focus on only execution, we don't expect any lumpy inventory or range to come in to the working capital. So as revenues go up, our sense is the number of days will keep improving the working capital. So that's the story on the working capital. On the exports versus domestic, we export to nearly 100 countries globally. And with the uncertainty in US is hardly 2 to 3% of our overall revenues. So our sense is that export business will also grow, although the shift between domestic and exports in terms of mix will happen, but that's not because exports will not grow or will slow down. It's because the chipboard business and plywood business is largely domestic oriented. So that will alter the mix between domestic and exports. But exports will also continue to grow. And we see a positive way forward for us in the international markets too.
All right, Mr. Mittal, pleasure having you as always. Thank you for sparing time and joining us. Wish you good luck for the rest of the year as well. Numbers continue to trickle in. ASAF Small Finance Bank, a net loss this time around compared to a profit last year. The stock is down around 4%. Just pull up SBI before we go into that break. And the slippage number for SBI was higher on a sequential basis. And the stock, though, has recovered from the lows of the day, still 0.5% lower. Take a short break. More on the markets on the other side. Stay tuned.
Oh, well, absolutely never a dull day here.
Welcome back. Time for our special segment, Crypto Corner, where Manisha tells us all about what is happening in the world of the digital currency. Let's go across to her and find out what is fueling the crypto rally.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Oh, well, absolutely never a dull day here. But as we start our new segment here, and it comes on a positive and a higher note as well, because the U.S. president overnight has signed a very important bill. This is the 401k retirement plan. Until now, the investments could only be done in case of stocks, bonds and cash. But now the 401k funds can be put in real estate, private equity and, yes, in cryptos as well. While, of course, this comes in as a very, very strong positive, the order also directs the Department of Labor to actually look into this as well on how and reevaluate as well on how crypto should be treated by retirement fund managers going forward from here. Well, interestingly, this could lead to crypto integration with broader financial system, bring it mainstream, and that is exactly something that the US has been working on for some time. Though there are experts and commentators expressing concern as well about higher degree risk and volatility that cryptos also brings on the table there. Interestingly, when you look at the last 1 year, we've seen a lot of positive, friendly regulations coming in US. The Bitcoin ETF is a success story that was launched in January 2024, and we've seen billions of dollars or inflows coming in for the Bitcoin ETF. And then it also has been about US, where we've seen the Genius Act go through. Clarity Act and Anti-CBDC Surveillance Act are a couple of acts that the US president perhaps could be signing in days to come. Genius is already on there. And then apart from that, it also has to do with a very strong June quarter that we saw. It perhaps has been the best on record. Remember, Bitcoin hit record highs in the month of April there, and it has been holding above that $110,000 there. Bitcoin volatility also is at its lowest since 2023, indicating that there is a maturing market. Remember, the adoption also comes in from corporates, companies, institutions, etc. And that has been giving much needed credibility to the crypto markets as well. Apart from that, when you look at the overall market capital, that has been on a rise too. $3.95 trillion at the last count. It did touch $4 trillion as well in the previous week itself. The final plate on the screen should come in on your screens that tells you on how the cryptocurrencies really have performed in this year and in the previous 12 months as well. So Bitcoin has given you 92% of returns in the last 1 year, and we've seen very strong gains, anywhere between 50% to 500% of gains. That is what Ripple really brought to the table as well. So many of these are second layer, first layer cryptocurrencies. These are the tokens that actually have established their credibility, are long-term investments, and that's the kind of gains that they have brought onto the table.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Thank you for that, Manisha. We take your leave on this edition of Mid Cap Radar. Your stocks on the other side.